Right. Well, welcome everybody. How you doing, everybody? My name, just in case you're tuning in for the first time, I'm Darcy Ungaro. Your name, Rupert, is
Rupert Carlyon today.
There we go. And all this week, hopefully. So today, probably we only really have scope to do a couple more of these sessions before the end of the year. So let's make this one probably about the three biggies that we're kind of probably all mindful of as business owners, as investors, as borrowers of money for property in New Zealand. We're pretty sensitive to things like interest rates, inflation, what the markets are doing, who's in power that can influence the market. So let's start with New Zealand banks. You've picked up on something kind of interesting in terms of just observing the language coming out of the banks at the moment. What are your thoughts on the positive murmurs coming out of the banks right now?
Yeah, it's interesting. ANZ and Westpac have put out some interesting research in the last couple of days, both kind of starting to talk about the fact that the economy might have reached its trough. They're starting to see some positive signs, right? So for ANZ, it's the truckometer, where they've got a kind of a way of assessing how many kilometres trucks are doing, and that's kind of seen as a good gauge of the economy. And Westpac, I'm not sure why they're saying it, but they are. And it's really interesting, right? And even anecdotally, we're kind of starting to, when we're talking to business owners, when we're talking to people, they're kind of going, yeah, cool, lower interest rates. I'm actually willing to give it a go at the moment. I'm willing to kind of try stuff. So a property developer I was with over the weekend, and he goes, yep, we're finally ready. We're finally ready to kind of push go on a couple of projects that we've been sitting on for the better part of the last 18 months. So it kind of feels as though the low interest rates have they're starting to do their job. And if anything, it's probably the money hasn't hit people's pockets yet because of the lag effects, and those fixed rate rollovers haven't quite hit yet. But the confidence seems to be there, right? And what we're starting to see is business investing ahead of the curve to make sure that when those fixed rate mortgages come off and consumers can start spending, that they are there and ready to go.
It's an interesting bit of psychology, though, isn't it? That maybe it's a variation of good news is bad news, where, hey, we're at the floor now. The economy is toast. We're completely buggered. People are losing their jobs. It's really, and it is quite depressing out there, depending on who you talk to. There's a lot of pain, but in a way, that's good news, because that was the objective of the Reserve Bank of New Zealand. They wanted to crush inflation, and that was the way that they wanted to go about doing it. Now, admittedly, it's a lot easier to break something than it is to rebuild it, right? So I guess the true test of their authority in this space will come probably in the coming years as they try to walk this tightrope of creating an environment where people are incentivized to borrow money and invest and increase productivity, increase output as a nation. Do you feel like that's kind of what comes next? Or do you feel like we have a prolonged period of bouncing along a floor, which might not be low enough for enough activity to happen? Like, what do you see the next 12 months in particular looking like in this space?
Look, as I've constantly alluded to, I'm a natural pessimist and a skeptic. So I do feel as though we are likely to bounce around for a bit. I think we've still got some big headwinds, right? So lower interest rates, they are going to take a little bit of time to come through. But the flip side to it is that we also have an issue around government. So the current government is running an austerity package, and there seems to be no evidence at all that that's going to be amended anytime soon. Even little things, right? So someone was telling me recently, Auckland DHB, or what used to be the Auckland Region DHB, right? They've gone from a maintenance budget of a couple of $100 million a year to $5 million a year. Do you think about all of that work that's not going to happen? So I think we've got a combination of immigration where we're just positive, but I'm kind of not 100% convinced that the data is correct there. So whether we're in a negative population or positive, I'm not quite sure at the moment. We've got government spending, which hasn't quite got there and is kind of falling at a pretty rapid rate. And then we've also got the flip side, and then we've got the furthest piece along, which is actually interest rates. They are lower, but they're nowhere near as low as they were. And I think there's a chance that it's not going to take too long for people to recognize that actually interest rates are not going back to where they were. I mean, I'm a believer that the 5.5% that you're currently seeing across kind of a lot of those terms, I don't think it's getting much lower than that personally.
Okay. All right. Well, that's an interesting call to, I guess, put a pin in that one. Just like, I hope you're wrong, Rupert. I really do.
I hope I'm wrong too.
Yeah. on behalf of all the people on floating rate mortgages speculating on further rate drops, I definitely hope you're wrong, because that is one of the strategies, though, that I've picked up on a lot in the last 6 months, which I myself am partaking in. So it's not just something I've observed, it's something I'm involved in, which is the idea of letting your fixed rate mortgage expire, convert onto floating, which is a higher interest rate, on the belief, the hope, the expectation that the official cash rate announcements, as they come in at the end of November and in February as well, will bring rate drops that will actually flow through to the fixed rates. The fly in the ointment, or I guess the technical challenge here, is that the official cash rate can only really affect the floating and the short-term rates, like a 1 year rate especially. And so,
That's the issue.
yeah, we might get lower rates, which is great, yes, but we might also at the same time see the 2 year, the 3 year, 4 year, 5 years actually increase because of all of the reasons that we're seeing overseas, i.e., rising bond yields. There's this expectation in the market that there could even be another round of inflation coming. That's kind of on is that kind of what you're factoring in as well? Like when you're thinking about, you don't think it'll go much further.
Well,
What's your
I
rationale
think
behind that?
I think there's two things, right? So this I think is I'm pretty much where the market sits in my personal views and how we're investing in our fixed income portfolios at the moment. But I think we'll get 50 points in a couple of weeks. We will get another 25 in February. I wouldn't be surprised. I think there's probably only going to be one more cut after that, right? And I think the problem is we need to remember the big debate that we've been having over the last kind of probably 2 years is what is the neutral interest rate? If you'd asked me that question back in 2007, I would have told you neutral is probably somewhere in that kind of 4.5 to 5.5 range. If you'd asked me that question 3 years ago, I would have told you the number is 2%. And I think the truth is today, we don't actually know what's stimulatory and what's contractionary. And I think the market's settling on kind of 3.5% being the neutral rate at the moment. And what does that mean, right? So that means that on average, there's been kind of about a 1.5 to, or anywhere between a 1 to 2% gap between where the wholesale prices are in the OCR and where kind of mortgage rates come out. It's on the higher end of that at the moment. So I think there does need to be a little bit of mortgage and margin contraction from the banks. Yeah. But I think if you kind of go, look, pre-2007 is probably slightly more akin to where we are than today, then a 3.5% base rate isn't actually unusual and isn't even potentially a little bit low. And so that means that and particularly when we look at what we're already starting to see, right, with the moves that have already happened, we're already starting to see that positive momentum, and it won't take much for that to kind of pick up pretty strongly. And therefore, the only thing that's going to reduce interest rates even further is if the economy continues to deteriorate, which has the potential to be an even worse outcome. So I don't know, I'm just a bit nervous about that. And then when you overlay the potential for what's going to happen in the Middle East with oil prices under a Trump victory, you overlay the fact of the Trump victory and what's that doing to medium and long-term interest rates because of the view of what that does to the US deficit, tariffs. There's a lot of stuff which kind of gives you room to kind of go, actually, maybe 3.5% is kind of on the low end. And maybe we're going to need a higher interest rate to adjust to all of these structural shifts in the global economy that we're likely to see under a Trump presidency.
Well, I would agree with that. And I think the geopolitical piece is really interesting. Over the last few days, we've seen, I might get these details wrong, so please don't anyone rely on this, but I'm pretty sure it was out of the US, or at the very least NATO. No, it was the US, where they were approving the use of missiles into Russia, which, well, that's interesting. So effectively, NATO is now directly involved in a military conflict with Russia. I was watching a video of Vladimir Putin last night responding to that using the N word, the nuclear word, because there are two N words, and just to be really clear. And that's a whole other level, right? And that's before Trump even takes control of anything. That's with the current regime in the US. We're seeing that level of provocation go deeper. And I just wonder, between now and January, are we going to see a series of unfortunate events which could make next year just a little bit more complicated for when he takes office? And if I was a disgruntled party that was being voted out, I would certainly probably be tempted to give that guy a difficult job, right? They're talking a big game right now, getting people like RFK Jr., Vivek Ramaswamy, Elon Musk. They're getting this dream team together of unpaid advisors moving in to do some pretty serious, quite revolutionary things, I think, like quite significant, which will hopefully deliver
Yeah.
good outcomes, but could be coming with some side effects as well. But we don't know for sure whether or not the platform that they're going to be building from will actually be the same platform when they take office. It could be very, very different based on what happens over the next 2 months. And so, yeah, what are your general thoughts, though, like leading up to the official taking over of the White House from the next regime to the next regime? What do you think is going to happen in like geopolitics and in markets? Do you think geopolitics will settle down in anticipation of Trump coming in, or ramp up and get more tense?
I'm going to take the middle ground and say I don't think much changes for two reasons. I think at the core, Joe Biden is conservative and he doesn't want to see anything change from kind of where he's at, right? He doesn't want to see the world explode just before he kind of gives up. I also think, as much as we talk about the Donald Trump volatility and we talk about the fact that he's all over the place, he doesn't want to see that either, right? He's already had conversations with Zelensky in Ukraine. He's already had conversations with Netanyahu in Israel. He's kind of, I think, he's someone that's very, very driven by the markets. And I think, my guess is that actually Biden will kind of let it just continue to go through as in what happens over the next couple of months. And then my guess is that Trump comes in and actually not a huge amount changes, right?
Sure.
He doesn't want oil price to go to kind of $120 because at the end of the day, his voter base was rural, poor Americans. And that doesn't work for those people, right?
Mm-hmm.
And at the same time, does he really want, at the core of the Republican Party, there is still a whole lot of Russia hawks. And the last thing he wants is to kind of walk into a war with them, right? And neither does Vladimir Putin. So that's why I kind of go, look, Biden's not going to do anything because, to be fair, he's just a doddery old man. And Trump's, I think he's already got his hand kind of pretty close to the tiller. And he's not going to let anything blow up either, right? Because the last thing he wants is a whole series of issues. Sure. I think what you did say, though, was really interesting, right? When you got the likes of this cabinet that he's pulling together. And I find it fascinating watching it because they're almost making a point of saying, hey, we don't want government people, right? We want people that are here to create transformation and create change. And so whether that be Elon Musk and his role as getting cost out with a couple of hedge fund managers, whether it be the hedge fund manager that they're looking at as kind of Treasury Secretary, who really knows, right? The JFK or the Robert Kennedy, that I find a bit random. But at the same time, they do have the potential to truly transform the US government, right? By thinking about it differently and thinking about things in a whole different way, right? Because if you think about government, it is full of bloat. It is full of a whole series of things that just do not work. And that's no different in America, New Zealand, Europe, everywhere, right? And so you think about someone like Elon Musk, and he's going to come in and go, you know what? The defense program, SpaceX is going to take it over. It'll make him a trillionaire, but it'll probably save the US government trillions of dollars along the way. The fact that he'll figure out ways of doing healthcare, and I think there's why we're so focused on the negative and the inflationary impacts and all of that kind of stuff of it. Mm-hmm. You know what? Maybe there's this other side that actually having a complete outsider with outside people come in and do things very, very differently. Mm-hmm. Maybe it just means that we get different results, right? Because let's be honest, nowhere in the world are we happy with how governments are behaving.
That's right. That's right. And Department of Government Efficiency, DOGE, it is going to be really interesting. That much I can say. But I was reading something which kind of went through what could they actually strip out? What could they actually save? And it is a tiny fraction of what they are spending right now just servicing this $36 trillion debt. And so, yeah, it's great to get rid of this government bloat. But unless there's a solution going on behind the scenes to get rid of that debt, which there is, then it doesn't do anything. And that's the part where I'm really fascinated. And that kind of brings us to the next bit, which is the Bitcoin apart. And the fact that they are very seriously, like with the Loomis bill, Senator Loomis, forgive me, I don't remember her first name, coming forth with this idea to hold Bitcoin, and not coming forward with the idea, but actually they might go ahead and implement this idea where they effectively acquire Bitcoin strategically and hold on to the Bitcoin they already have for the purposes of repaying the national debt. And when you think about it, they actually do have a plan. It's flawed. It's based on assumptions. It may not work, but they're going to strip out wasteful government spending. They're going to make America great again, and they're going to get rid of the debt according to this plan. Whether it works or not remains to be seen. Your views, though, around a Bitcoin strategic reserve, do you think that that is really just like insane, off the charts? Or can you kind of see that maybe this could actually work?
I don't think it does a huge amount, as my honest view, but I think he'll probably do it because there are some easier, and that'll send some strong signals in its own right. I mean, you remember when he brought it out and he introduced it kind of, I haven't seen the Senator, the new bill that you're talking about, but when he brought it out 6-8 weeks ago, he talked about we're going to create a strategic fund of Bitcoin. But he also and then he said very quickly afterwards, and we're going to do that and start that by simply stopping to sell assets because the government through the US law enforcement owns a hell of a lot of Bitcoin. And so I think I see that happening. So I see the US actually does become an owner of Bitcoin. And as that starts small and people kind of, if that grows and they kind of see some profitability off the back of that, then maybe they go more. Do I see crypto or Bitcoin as a way to kind of reduce the US debt? No, because I mean, I'm a fan of Bitcoin, but do I see it kind of reaching the $30 trillion that's needed to kind of hit at some point? So that means a kind of a 15 times multiple at some point in the next kind of 5 years. Yeah, I not even I would kind of go close to thinking about that, right? And that also means because they can't buy a huge amount, it's actually probably 100 times multiple if they actually want it to achieve what they want it to do.
It's an interesting one. Like, if you were a country, if you were a nation state and you could print your own currency, why wouldn't you just print an infinite amount of currency and just gobble up everything that's there? I think that would be interesting. You're effectively you're pumping your own bags at that stage, but it'll work because you're sucking in all the capital from the world basically and pumping up your own bags, and then you can do what you want with it. That could actually form the basis of a new currency system, which maybe, who knows, maybe in some crazy CIA conspiracy theory, that actually is the strategy. Who knows?
But I think, so for a small country, it works, right? So you go, I mean, what have we got in New Zealand? $140 billion of debt, government debt. Though the problem we have as a country, I mean, even we would struggle to figure out how we can buy $10 billion worth of Bitcoin. Right? Mm-hmm. If the New Zealand government turned around and went, cool, we're going to buy $10 billion worth of Bitcoin, that would probably double the price in its own right. There's not enough liquidity to make those changes. And so you then think, you try and put that on scale, right? Where you go, cool, if New Zealand's going to struggle to kind of make a dent and do it, imagine what a large economy in a large country is going to be able to do or not be able to do. I mean, it does raise some really interesting points around, I mean, some of those Latin American countries, Nicaragua, all of those kind of things. It potentially does become a good diversification of that. But yeah, it is an interesting one, right? Because it still means you need to sell the currency on the way through, though. So if you've got a Nicaraguan peso or whatever it is, you've still got to sell it and convert it to US dollars and then use those US dollars to purchase the Bitcoin, which will put a huge amount of downward pressure. You still need a buyer of that currency, right? Unless you can find someone that's going to buy Bitcoin and or sell you Bitcoin and accept those Nicaraguan pesos. And so that's the challenge, right? I don't think you get it just because you've replaced US dollar with Bitcoin. I don't think you've actually got around any of those kind of traditional buying and selling kind of volume issues.
Yeah.
Does that make sense?
It does. And especially like the fact that when you're buying something, you're actually selling something else. Like when you're buying anything, you're selling your currency, especially when 100%. You're buying another currency with it. And when the US dollar is at whatever it is right now, 108, I think might be the Dixie. I'm not quite sure. But when your dollar is that high, I guess you could probably afford to do a little bit of selling to buy another type of currency. And especially if it was a digital currency, digital scarcity, and it was outside of the fiat system, then you're kind of using Bitcoin as a strategic pressure relief valve for a US dollar that could actually go into hyperdrive should interest rates stay higher for longer. and debt servicing costs from nation states go up. That's kind of something alluding to the dollar milkshake theory. And that's kind of what we've been seeing in the last little while, is that you kind of would expect the dollar to go down based on some of the circumstances, or I would have, but it's actually gone up.
But
Fascinating times, right?
it's kind of interesting though, right? With the currencies, you're fighting against two separate things. One is you're saying the more dollars we print, the weaker the currency should get because kind of more supply. The flip side though is you've got the other kind of traditional finance theory is exchange rate differential. I mean, sorry, interest rate differential. And the larger the interest rate differential, the stronger the currency needs to get. And so I think, and I hate to say this, but I think actually what we've seen is that supply impacts inflation, but it doesn't necessarily impact exchange rates. It's the interest rates that drive inflation. And actually what that does is it's kind of paradoxical, right? Because particularly for if you've got a reserve currency as strong as the US dollar, well, like the US dollar, potentially the euro might get away with this. Remember, I don't know whether any of the others would, but kind of what they're saying is you're saying supply is irrelevant. So therefore, because, and actually, if anything, supply drives inflation, which drives higher interest rates, which then drives stronger currency. So you've kind of got rid of the very first principle on its own because investors are not worried at all about default or around devaluation of the dollar. Does that make sense?
A little bit. So what you're
We're
basically saying
throwing
is that,
traditional economic theory right on top of itself.
yeah, and you have this feedback loop as well, right?
Yeah.
And the only way to destroy a feedback loop is to kind of interrupt it at some key juncture and then flip it around. Interesting.
Which will be fascinating to see if he does that, right? Because one of the things he has also been very clear on is he does not like a strong dollar. He does not like strong dollar. He does not like high interest rates. But I'm not sure what he does about any of that, right? He wants a low dollar, low interest rates, massive trade deficit. Massive government deficit.
Yeah.
And he wants tariffs. And to be fair, he can probably have one or two of those four things, but he definitely can't have all four of them. So
Yeah.
I don't know. If Bitcoin can solve that problem, then fuck, I should be mortgaging every single possible thing and going into it.
Well, maybe you should, Rupert. Maybe you should step into my office, man. Okay. Well, moving on though to Bitcoin, I just want to come right out and just ask your opinion. This time next year, we would have probably gone through the full bull market phase, which should be around the next 12 months ish. What's your projection? What do you think? We're sitting here 12 months from now. What is the price of Bitcoin?
I will get myself in massive regulatory trouble for saying this, so don't listen to this, and it's pure speculation. I think it goes higher, right? I think we do hit 100,000 and then I think we go up. I think what we're seeing and then I think the second point, which again is probably hopeful thinking versus analytical thinking, I do think the ETFs hopefully soften the cycle because all of a sudden you've got a much, much, much wider range of investors that can invest in this asset class, right? You've got whatever it is. As of 2 or 3 weeks ago, it was $25 billion sitting in those ETFs. Today, that number is probably closer to 35, 40. If one of the reasons we know that it's been kind of highly volatile in the past is because you've only got so many buyers, so many sellers of this as an asset class. And what the ETFs have done is they've kind of opened it up to absolutely everyone. I've actually just found out yesterday about another KiwiSaver fund that's kind of buying one of those ETFs and they put a tiny amount of their KiwiSaver money into them, right? That's the kind of thing that these ETFs do. If you're a hedge fund that you like to you kind of think, I've been looking at Bitcoin for a while, but it's too expensive. You buy the dip and you don't need to go and do anything to buy the dip. And I think you're going to get far more investors looking at it. You're going to get far more people willing to kind of trade in, trade out quickly. And so that's why I think those ETFs will potentially do quite a good job at helping minimize some of that volatility as well, right? Probably less so on the upside. Though in saying that might be why we've had a bit of a cessation of that growth in the last kind of 4 or 5 days. I haven't looked at the ETF flows, but yeah, I think the ETFs hopefully dampen the volatility.
Yeah, I agree with that. Like I think the bigger, because it effectively creates, if not the reality, but the impression that it's a much larger asset class, which bigger boat, bigger ship takes longer to steer. So that makes sense. There's a few things that I'm curious about. One of them is what we were talking about before with the Bitcoin strategic reserve and effectively a game theory in place where it's in everybody's best interest to front run the US with what they might do. So that's one nation state piece. That's inflows into ETFs. That's massive. advisors like myself, definitely in the minority, I know, but there's a lot more people like me that are Bitcoin friendly advisors or crypto friendly advisors, a lot more. And that's increasing. And so I think we're going to see a lot more traditional investment advisors recommend a small allocation towards Bitcoin. And I was reading something this morning put out by an advisor in the United States named Rick Eidelman, and he was going through the numbers and how he arrived at this answer. But the price of Bitcoin that he arrived at was $420,000. Nice round number ish. And
Mm.
that was arrived at by basically saying, hey, if everybody put in 1%, then effectively it's rejigging all of the global wealth that sits in property, in equities, in bonds. And if there's just a little bit of a rebalance there and just 1% of global wealth finds its way into Bitcoin, then we're up over 400 grand. Now, to me, it kind of feels like most of the models that have been talked about have been undercooking it in my mind. Mostly what I've seen, the conservative ones, 120, 130,000. Some go to 150, some go to 250. I agree. I think it goes much higher. I just don't know how long it takes to get there, whether it's this cycle or whether it's the next cycle. But this is my third one, and I can say that every time it always feels like it goes way further than what most people could ever imagine. And again, don't anyone trade off of this advice, but it really does feel, well, it's not advice, of course, but it really does feel like a couple of things might happen next year. Interest rates could be higher and longer, could be higher for longer, and Bitcoin could be going higher and faster. Those would be my two big calls. I hope I'm wrong on at least one of those, for the sake of those that aren't in, or for the sake of those who are in, depending on what sector. But your general thoughts? So you're going to say, what's the number that you're going to say this time next year, Rupert?
I'll give it 120.
120, man. All right. I'm gonna go even further than everybody else, because I already was crazy enough to say that we're probably going to get a 1% reduction to the OCR at the end of this month. And already I know I'm wrong on that one. I'm going to say half a
Well,
million.
I've been the one pushing for 75 points for the last two sessions. Clearly, well, to be fair, in hindsight, maybe they should have gone 75 points last time. But
Yeah.
yeah, it is an interesting thought. But I am conservative, right? The one flip side, though, which kind of potentially, I think maybe why it moves again a whole lot stronger. I am shocked at how many people are coming up to me right now and going, fuck, how do I buy it? How do I buy it? How do I buy it?
Yes.
And I accept I'm more into it than I was in the last part of the cycle. But compared to what happened in January last year,
Mm-hmm.
I mean, yeah, I'm truly amazed at how many people want to get into crypto right now.
Yes.
Someone talked once about, you've got an issue when every single taxi driver you talk to talks to you about the asset class.
Yes.
And we are well into that world right now.
Yeah. Oh, yeah. I'm getting approached by some family members coming up to me as well. A lot of clients.
100%.
Regretting the fact that they didn't get in last cycle, thinking, hey, it's too high. Have I missed out? It's too late. No, you're not too late. We're still very early in my mind, but it makes sense to get some advice if you can, or at the very least, put in a lot of research, right? I think the fact that you can buy Bitcoin through an exchange traded fund or even KiwiSaver now it's not really a big deal anymore. There shouldn't be any technical reasons why you don't do it. But I think if you're really scaling into some significant amount, you really need to be thinking about how you custody it. Multi-sig wallets or hardware wallets, software wallets. Those are important conversations to have. And I think that's the space where I'd love to see other advisors move into that space more, because if this does go to 500,000 this time next year, which is kind of like where I see it, again, not advice, I kind of feel like people are going to treat it very differently. It's just like if you ever took out a bunch of cash from the ATM machine and you put it in your pocket walking down the street, you feel a little bit differently, like a little bit more vulnerable, right? When our bags become really heavy, this is going to be a real big issue. And identifying where the flaws are in your security arrangement, how you're holding this asset, is going to be number one. Don't have that worry with you guys with your Bitcoin fund inside KiwiSaver, but you certainly do for those people.
Well, I was going to ask you about that, right? So I find it interesting. So I've just kind of quickly in the background been doing some numbers. And it's kind of the net inflows into those ETFs over the last 3 weeks, 2.5 weeks, has been $6.5 billion, which is kind of massive, right? So that's kind of just what we've seen recently with kind of that side of it. I guess my question, the one quick challenge, and I'd kind of ask you on as I'd call a true Bitcoiner, or a true crypto guy. So you talk about security, custody. Why would you buy the asset directly now versus going through the ETF? That's where I struggle with, right? Because
Sure.
it's easy, you're safer in my view, because you're relying on someone that's got insurance and regulated in New York, and I take that over anything else any day of the week. Plus, you get tax benefits. So why would you buy Bitcoin directly versus going it through the ETFs?
The reason why I would do it personally, and I believe in
Mm.
both, there should be a core allocation, which in my view, for me anyway, would be held directly. Um, and then the outside of that core is the amount that you would have for rebalancing, maybe a little bit of profit taking along the way. And that would be better done through more tax efficient vehicles. But the reason why I would view the core allocation of Bitcoin, and this is really just true with Bitcoin, not other types of crypto, I kind of view Bitcoin as, and I'm thinking very long term here, as the seed of intergenerational wealth that is really only going to be valuable in the future if your connection to it is as direct as it possibly can be. And so having something like a multi-signature wallet where 2 out of 3 keys have to authorize any transactions and those other key holders are other distributed in other parts of the world means that when you're dead and gone, you can now pass this intergenerational asset to the next line, next family member in line. And you can actually do some really creative and innovative things like time lock certain tranches of your Bitcoin allocation so that only if certain preconditions are met in the future or block heights or time, like within 15 years, my kid's going to get X amount to help them through university. That could all
Yeah.
be done outside of the traditional financial system, which I just think in a world where there's exponential change happening, which creates multiple waves of uncertainty in multiple dimensions, having something that is direct custody of a digital scarce asset can be transforming for your future line of family. And yes, of course, you can benefit from the price appreciation, but I think the other element of this is that it's more than just number go up. This is the ability for some families effectively to set themselves up as their own bank in the future as this becomes infinitely valuable. Again, I'm thinking way in the future, not just the next 12 months here. And so I think at the very least, as soon as you get around 1 Bitcoin plus, you really need to be thinking carefully about how you're custodying this asset and what is your
Makes sense.
long-term strategy, right? That's how I look at it.
Yeah, no, it's an interesting one, right? And I actually have a huge amount of sympathy with that. I just the tax stuff is where I kind of go. Yeah, it's the tax structuring, which to me says, yeah,
Yeah.
because when you can
Well,
hold it in
here,
a way where
yeah. This
you
is where I always
avoid
go
that
back to
capital
that.
gain.
Yeah. Well, this is where you go back to like that scene in Back to the Future where Doc, sitting in the DeLorean about to take off, saying, "Hey, where we're going, we don't need roads. Where we're going with Bitcoin, we don't need nation states." And I'm thinking as a Bitcoin maximalist here, long term, where we're going, we don't have tax, not in the way that we look at it now, and we don't necessarily have nation states with the ability to reach in and take your assets in this very, very, very far distant future, where maybe our grandkids inherit. Who knows? And so that's why I think you don't like the longer you look into the future, the less you need to worry about that, in my view. And I might be stretching it quite a bit here, but I guess if we're thinking further and further into the future, you have to think wilder and wilder thoughts. And that's why I think, yeah, like in this life where you and I are breathing in, yeah, it is about tax and it's about thinking about getting good performance without too much volatility and making sure that we're actually being prudent with the decisions that we make with our investments. But in the future world, different story.
Fair enough. And I think on that we should close it up.
Excellent. Before I really start going down the rabbit hole, yep, stop me now. That's cool. Okay, but next week, let's have another good chat and maybe do a bit of a
Another one
roundup
next week, and
experiment.
it will be the last of the year next week, and
Yeah,
we will come back with a revamped and even better product next year. But let's
very
get
good.
one more off the ground, and I suspect that hopefully Donald Trump has done something interesting by next week that we can spend a whole lot of time talking about that.
I guarantee you, in the next 12 months, it'll be he will be the best catalyst for discussions. We'll see. Cool.
Cool.
Awesome, Rupert. You
Okay.
enjoy the rest of your day, and we'll catch you next week.
Thank you. You too. Awesome.